There. Let's turn our attention to the business news. It's over to Babita. Hi, Babs.
Karen, thank you very much. Now, within the last few hours, European regulators have confirmed tough restrictions on the bonuses that banks can pay their staff. Only 20 to 30% of bonuses can be paid in upfront cash. That's according to new guidelines announced by the Committee of European Banking Supervisors. The rules are much tougher than those agreed by the G20 countries, raising fears that bankers may emigrate to more lightly regulated countries. The bonus limits will apply to the entire global staff of European banks. Well, with more on this, Chris Roebuck is from Cass Business School and he joins me now. What to say about this? I mean, it's a massive change, isn't it, in terms of European banks and how they do business. But what kind of position does that put them now in terms of the global platform of the banking industry?
The whole issue is that the banking industry, the financial industry, is global. And what we have here is we have the Europeans deciding to do things in a very different way to everybody else. And that has significant implications from the competitiveness of European banks, particularly British banks, in other markets. Now, if you look at Asia, that is the biggest potential banking market in the world, and it means that British banks like HSBC, Standard Chartered and Barclays will have to pay their people in a very different way to their competitors in those markets, and that could have a serious impact.
Let's talk about the serious impact it could have. I mean, I presume you're talking about recruitment of people into the banking industry. They'll be, put off going into European banks.
There could be a big issue about that, because if you're in a situation where you're in Hong Kong and you have a number of jobs on offer and you're looking at American banks or European banks, to be honest, you're going to go for the bank that gives you the best deal.
And we're talking about more money here, aren't we?
We're talking about more money, or we're talking about how the money is delivered. What percentage of your money are you going to be given cash each year? What percentage is going to be kept back for 2, 3 or 4 years? And let's be honest, all of us want the cash now. We don't want to wait for the cash.
Why do this then, Chris? Why would Europe want to lead the way when perhaps US and Asia, who obviously make up a large part of this global industry, are not doing the same thing? And it raises a massive difference between the two.
In terms of Europe, Europe felt deeply shocked by what happened in the financial crisis. And Europe has traditionally taken a more conservative view of how people should be paid vis-à-vis basic salary versus bonuses, if you compare that to America or other parts of the world. And therefore, the European response has been somewhat tougher. The problem is that what the Europeans need to do is make sure that that becomes a global response, so everyone's on a level playing field. OK,
we'll have to see how it pans out, Chris. Thank you very much for that. Chris Roebuck there from Cass Business School. Well, it's been a quiet session for stocks on both sides.